Hello, this is Stephen Wilson again. I'm running for Congress in the Missouri 3rd District, the U.S. Congress, 2012. I'm a libertarian, and the purpose of this video is to explain my plan for a tax model in the state of Missouri. And the purpose of this is to help you understand the theory and the application, and we're going to begin with the overall structure. First and foremost, we have to acknowledge the structuralism, and what you're looking at is a very simple diagram of a city and county and a state wherein the citizen has to be able to engage all three, but has to be able to fund all three. Participation in the government is just as important as an economic event. And when we look at the structure, we have to identify that when people go through the language game and say that the government does that, and the corporation did this, and my bowling league did that, the fact is, in structuralism, in group dynamics, there is no government. There is no corporation. There is just a human. And just because these entities are identified, we have to acknowledge what they are, and that for the most part they are nothing but cosmetic. And when the voter understands the kind of group dynamics that we have, then and only then will the tax model start to come into play, where we can actually remain functional in everything that we do. You see, the diagram proves that the citizen is the heart of all three. Now that we have an idea about what the structure is, and that we start to understand our place in the food cycle, now it is time to deal with the game grid as is, and start dealing with the assumptions and the utility that we will use to play this game. We're going to start dealing with the utility, and that's going to be based on lean function. The government should operate at the lowest possible production cost. We need to acknowledge the principle of redundancy, which is that which is done in one should not be done in the other. And we need to acknowledge that income tax should be the sole source of state revenue, if the state is to have any revenue at all. We start dealing with the assumptions, and we begin rather quickly with cash accounting. The reason for it is cash is a marker of production, and cash is done in real time. We're also going to be dealing with tax allocation service, which means that the citizen is going to be able to actually not only pay taxes, but tell the state where the money is to go. We're not going to issue any bonds on future debt. There will be no use for future value in regards to present value. By that I mean there won't be any means for you to financially bridge one to the other. We're not going to acknowledge a currency pool or a general fund where amounts and expenditures can disappear. We're going to assume on a 24-month state budget calendar. We're also going to assume, tied with the bonds, that we are not going to use notes payable. No liabilities held will be longer than 24 months and 1 day. The only two forms of entities are going to be a human and a business. One cannot be the other. Tax payments are going to be based on the status of the entity, and we're also going to acknowledge the rotation of the calendar. Businesses will pay an odd year, and the human will pay in an even year. And basically the separation for the entities it will be explained a little bit better later on, but in the moment we need to acknowledge that dealing with corporations and limited liability and things like that, giving some kind of make-believe entity access to credit, well, it doesn't make any sense. It's completely irrational. So the state is not going to operate like that anymore. And finally, the one thing in regards to the utility and the assumption is the fact that all people are going to declare income regardless of their age, the amount, and the source of the income. It is now time for us to talk about the legend. This is going to give us a floor or a foundation from which to play the game. The first thing that we need to acknowledge is that income is defined based on time, which will be January 1st to December 31st. Revenue is defined as any money earned performing a service or manufacturing a product through their own labor. By that, basically what you identify as your wage is going to be your revenue, and the revenue through January 1st to 31 is going to be your income, or rather January through December 31st, that's going to be your income. And that's what we're going to deal with cash accounting. The human is a citizen, non-business. A business is an entity defined by the economic events that take place because of its existence, non-human. Under no conditions can a human be a business or vice versa. You have to be one or the other. You can't be both. If the company equals the employee, then profit equals wage. The human in charge of the business must be set and issued to the Secretary of State's office in order to do business legally. By that I mean you actually have to set an anchor for the firm. So instead of saying that that's a make-believe entity like a corporation, a real human is going to say, I'm the chief executive, and it's going to be my responsibility to pay the income from the profit from the company, because the company, if it were a human, they'd have to pay their wage, or their taxation based on their wage. And the human in charge must declare the income for the business, and the human must acknowledge the business income in front of a judge under oath. Now, the reason for this is to make sure that we understand that there is going to be some trustworthiness, but we're also going to establish that even though there is a second kind of entity, a human, a non-human, the business is going to start dealing with the overall legalities of being held liable for the things that you do. Basically, this would be the same principle that we now have in advertising. If you were to make claims that you couldn't prove, you could actually be taken to court, and you could be held liable for these things. So we're going to use the same principle for the people that take up management positions in the companies that identify as a business. This does mean that all the separation that we have now, sole proprietor, LLC, corporation, these now disappear, and either you're a human or a business. And now finally we're going to be dealing with the calculations of anchors for our formula. We're going to be using three of them: the median household income, the discount rate, and the unemployment rate. The reason that I'm using the median household income is because we use it for sales to set up purchase power within a saleable domain, to set up your sales route. The median household income statistically is far superior than the mean income in that particular domain. The discount rate is the rate offered by the Fed and what it's charging its banks to borrow money. Theoretically, it is correlative to what's called the velocity of currency, or the velocity of money. The faster your money is in your economy, the better your economy is. So theoretically, this discount rate does give us an indication of what's going on to the lending that you have. It does not indicate what that lending is doing. It just gives us the rate that it's being lent. The unemployment rate obviously has been used before, and we're going to use it here. And this will be simply set by the Secretary of State's office, and it will be the aggregate number of people theoretically able to work against those that are still looking for work. We look at the legend and the algebraic, and we have a multiplier that will be fractional to help us understand what rate you're going to be paying per tax strata. As we see here, we're going to add the percentiles of the unemployment rate and the discount rate together, and we're going to multiply what you have there as a lowercase a, and then we're going to find that, and we're going to multiply that by the person's income per year. In closing, I know that this video has not gone into great depth, and the main issue there is because I didn't want the tax model to be difficult. I wanted anybody in high school to be able to follow it. And I understand the dangers of aiming so low, but the fact is it becomes too complicated, and there is no reason for you to make it that way. And with people going through the election cycle and the election coming up fairly soon, the American voter is being saturated with all of these models about how the government should be collecting its taxes, but the adult conversation should be talking about what the government's budget is to pay for, because it is completely irrational for you to go through funding if you don't know what you're going to be funding or what the purpose is. And that's a conversation that the youth are going to have to do. The 20-somethings and the 30-somethings, they're going to have to be much better. They're going to have to expect much more than their parents and grandparents have for the people at the podium, for the people on the ballot, regardless of what party they are. The youth of America, they're going to have to do a much better job of minding the store. Again, my name is Stephen Wilson. I'm a Libertarian. I am running for Congress in the Missouri 3rd District. And thank you for your time.